Hi there, traders. This is Brad Gilbert with the week ahead for the markets and what to expect. All right, now, unless you've been hiding under a rock, last week we had a sort of great outcome. The Federal Reserve brought forward their sort of forward guidance on interest rates and everything else. That gives the dollar a massive footing, and we've seen it run. Now, you'd be mistaken to try and sort of sell rallies on the dollar or buy dips in euro, sterling, Aussie, Kiwi. You want to let's let the dollar do its thing. Now, the good thing is, and I'll just show you the charts. The good thing is when you have a run like this, straight after the biggest central bank, I should say, not just after a central bank, but the biggest central bank, you get a massive couple of 100-point move across the board. Now, I still think this is just the start of the trend, but what we'll be looking at, dollar yen's the odd one out. What we're going to be really looking for is we've got a clear guidance now on what the US dollar is going to do. And we are starting to see the macroeconomic data kick in. So after like you've had a couple of sessions, there's still going to be a downward bias, okay, on euro, sterling, Aussie, Kiwi, and upward bias on the dollar. But what will come into play, especially after like 2-3 days, you're coming into Monday, we're starting to get closer to 4 or 5 days in this short-term trend, which I think is building for a sort of medium-term status. This is where you can start to get a few decent little retracements. But what we're going to need is we're going to need some of the macroeconomic data to come into play. And so the markets are going to find heading back towards normal conditions where, especially with the US numbers, we will start to see the currencies move or the dollar move around. Okay, so we get weak US existing home sales. That might slowly just give us a retracement to potentially buy dollars at a cheaper level. If those numbers come in strong, well, it goes with the current trend, and that's where we're going to see sort of decent moves to the top side in the dollar. Now, so looking at the week ahead, right? So unlike what we've seen in the last year or so, especially around this pandemic, we are now starting to see the macroeconomic data come into play. So you've got to sort of map out the week where the key focal points will be, which specific pairs are in play, etc. So what I've done here at the top here is I have highlighted, let's get the pen, the sort of the two top tier data, okay, like level 1, level 2 data. So you can see this is the data you want to be keeping a close eye on. And now that sterling, for instance, has got clear downward direction as well, this is where the sterling data comes in. If it's negative, we're going to see a nice run to the downside. If the data comes in a little bit stronger, well, you might get a slight little pop, but we're looking to go with this US dollar trend. So as you map out the week, not much out today. So don't get yourself fully excited and think, oh, this is going to be great. We're going to be banging away. You're really waiting till at least Tuesday in the US, okay, before we start to get some numbers come out. But the focal point will be the Bank of England as well. So just keep an eye on this because you've got actually some good numbers. I love these IFO business numbers. So this week, I mean, I haven't sort of scrolled down and showed you all of the data, but most of it is, I would call second tier, which means there's no massive hype before the numbers. So liquidity stays in the market and the markets move freely, right? And what you can get there, this is the third week of the month. We're going to have more central bankers talking, right? So you got to sort of manage that, those comments, random comments, but we will start to see a lot more activity across the other pairs. I think the other central banks will come along and start talking more about what they're going to do to manage these economies as they sort of slowly unwind out of the pandemic surpluses and all that sort of stuff. So, but the key part for me is with dollar direction, any dollar numbers, you want to start to get these numbers up in front of you, have a good look at them. The German numbers, IFO business numbers, once again, weak German IFO numbers here, works with the downside in euro. We get a connection here of following up of strong US numbers and weaker other currency numbers. We're going to see these moves really continue another 150 plus points this week at least. Now, if we do start to see a bit of discombobulation, say for instance the IFO business numbers come out really strong, well, euro is going to come back a little bit. You put that in with potentially, say, weaker US numbers. Well, that's where we get the retracement, back to not a high or much higher level, probably euro back towards 119, 119.50. okay, where we can get short and run with the dollar trend. Now, the Fed, right, they have set the tone for the US dollar for the sort of coming 4 to 6 weeks, right? So you just work in the macroeconomic number around that. If it's strong, goes with it. It's an easier move. If it's opposite move to what the US dollar is doing, well, it's going to find a little bit of traction. So just, this is the data for the week. Now, when you go through it, there's a lot of stuff coming out. As I said, second tier, obviously, of course, the Bank of England is, I'd say, tier one data. You got to keep an eye on that, of course. Coming into that third week of the month, it's very important you just keep an eye on what the central bankers are doing. This is where they wheel them out and sort of get them talking to the market. Now, most of them have speeches, right? But if there's a Q&A at the end, that's where they get to put their own little bit of spice into things. So if you go down through this week, you'll find a lot of Fed members talking. Okay, Williams, Bullard, Jerome Powell's testifying before the House of Reps. Okay, so all these things will be important, and the market's looking for little snippets of what's going on. I think the Fed's already told us what they're doing. And when it comes down to the Bank of England, announces rate decision, publishes the minutes of the meeting after the rate decision, right? So that's when sterling is going to get really aggressive. Now, if the Bank of England is exceptionally cautious and there's no change of forward guidance, I think that's going to set us up for another big move to the downside in sterling. If they do come out with some sort of forward guidance, say, you know what, we were thinking of raising rates in 2024, we might bring that forward by a year. Well, sterling's going to rally aggressively, right? These are the things that you need to be sort of focusing on as we go forward. Later in the week, you got Bullard and Williams out again. So just keep an eye on it's twofold, right? You've got the economic data, right, which is the key nuts and bolts of, you know, how these economies are going and what the central bank looks at to make policy decisions. But also keep an eye on the central bankers themselves, because this is where they get to sort of not really manipulate the market, but actually give you, communicate to the market, I should say, and get the market moving. They don't want massive volatility, so they tell you what to expect. They comment on previous decisions, etc. And if it all points the one way, well, that's where we get the big medium-term trends, and that's where the cash is. All right, so that's where we are with the macro data. Of course, what we're going to be looking at is with the prospect of higher rates, you'd expect equities to start to get hit a bit more consistently, move to the downside, especially stronger US numbers. Equities should come off, right? You get the dollar rallying and the dollar block falling. That's the general gist of it. Now, as far as this week, I mean, if you haven't been in front of the screens for like 8 to 12 hours, and I would hope everyone's taking a lot of time off, not just staring at the screens, make sure you keep up to speed with what the main pulse of the market is, right? This is where using a service like Metastock or Bloomberg or whatever it is, you need to find out, get a synopsis of what's happening across the major pairs, and that can keep your foot in the door so you understand exactly what's going on. But now, one of the tricky parts of this week, okay, is going to be trying to work out, like you've got all these, okay, you've got equities coming off, you've got the dollar block falling, dollar rallying, all looks great, right? But we're in a situation now where we've lost a lot of, wrong screen am I on? We've lost a little bit of access to a lot of the movements or the clean entry points, right? Because let me just get on the daily charts here. Sorry. So we're looking for trend lines, right? On the hourly charts, you can't really see many. But what we are seeing now is on the daily levels. I mean, this is why you've got to have these charts up. And you see like sterling banging down through here, a clean snap through there. The Aussie, Kiwi, dollar CAD, not so much dollar yen. It sort of seems to be doing its own thing. Dollar Swiss hasn't really broken out of its range yet, but it is moving, obviously. You see that clean move on the dollar index and also euro. But there's another level here on euro coming up just on the downside around 118, the figure, or just above that. Keep an eye on these levels, because when it comes time to trade, you need to apportion your risk management according to where you can get in and where you can get out. Now, I did a piece on this the other day about staggering your entry levels. breaking up your piece of pie, not just into one trade, but have smaller positions to get you into these trades on retracements. It's very important. So you might want to check the Forex Vault for that. And outside of that, all the work that you've done in getting yourself up the curve with regards how these markets function is going to be absolutely imperative to you nailing it. Now, if we do have a key macroeconomic data coming out and it's say it's strong US numbers, I'd expect the equities to come off, right? And then you can come down and start to look at, say, the US dollar, right? And if this is going blue against everything, it's a good trade. It's impacting across the board. You just need to go and find the entry levels to get into that trade, right? It's pretty simple once you break it down and you have the structure of your analysis screens right in front of you. And then you can start to follow all these markets. You've got all the equity markets. You can see very clearly what's going on there. I mean, as you'd expect, got bad day in the US equities. The US equity market drives it. That coincides with the bad day on the European equities, and you've got to expect that to come through on the Asian equities as well. But obviously, as we start the week, right, the Monday is not the best time to be trading. The US equity futures a little bit mixed, right? So that's part and parcel. Everyone's just feeling it out. Market's trying to work out. We're going to see a retracement. We're going to see a continued move here across the board. Keep an eye on the global bond markets there as well. But bonds are taking a little bit of a sideline just at the moment. We are seeing an increase in yields there, obviously, on the German bonds, Euro bonds in general, and there's a bit of a mixed action across the board on the other pairs. So on the other bonds, I should say. So that's pretty much it. We've got you've got plenty to play for. We've got activity. We've got clear direction. The hard part for most traders or new traders to the market is trying to work out where to get in, right? Now, the economic data provides us a clear timeline. Okay, that's why we look at those numbers. That's where momentum can come from. So maybe look at those. You need to combine that with your technical levels, right? And with those technical levels, summing up the macroeconomic data and levels, okay, here. I mean, it's a long way back to resistance for a lot of these pairs now. What you need to be doing is assess your potential entry levels, stagger your trades, average in. Okay, if that's a bit of terminology that you know. And that's where you can get into these trades because it's quite haphazard. You start to look at these trades and go, okay, I can see clear trends here across the board. I'm just going to get short here. Well, if nothing's happening, you could be sort of walking into a knife fight with no knife. Okay, so that's where we are, guys. It's going to be an interesting week. We've got direction. If you missed last week's trades, put that behind you. Come back, reassess the opportunities. We now need to find and quantify where the best entry levels are. And that's what trading's all about. We've been waiting for this. It's come. Now start to use your own risk appetite, your own trade plans, your daily routines, and get this thing rocking. All right, guys, all the best. Cheerio.